Welcome to Idea to IPO. Hello, my name is Jennifer. Idea to IPO has been holding tech startup events in Silicon Valley for many, many years. We organize venture capital panels, legal workshops, networking events, and more. These days, we are 100% online. We hold an event nearly every day of the week. Please check out our schedule at ideatoipo.com. At this point, I'm going to hand it off to our distinguished moderator, Roger Royce. Roger, please take it away.
Okay, thanks, Jennifer. Thank you for that. My name is Roger Royce. I'm a partner, tax and corporate partner with the AmLaw 100 law firm of Haynes Boone. I'm resident in Palo Alto, California, heart of Silicon Valley. And today we are going to talk about one of my favorite topics, AgTech, agriculture technology, the technology of food production. We have a panel of investors primarily here today to discuss what's hot, what the past has been like, what the emerging technologies are, what the funding environment is like. So I think if you are interested in AgTech, you're really going to like this panel. So let me go through a couple of housekeeping items quickly before we get started. The format for today's presentation is we're going to have a panel discussion for 1 hour. We're going to go until the top of the hour, 1 p.m. Pacific, and then open it up to questions. And we'll do questions, Q&A for half an hour. So if you have questions while we're going through the panel, put them in the Q&A box, not the chat box, Q&A box, and I will turn back to the Q&A box at the end of the hour. This event is an Idea to IPO event. As you know, it's probably the largest startup meetup in the world with chapters all over the world, and therefore our attendees are from all over the world as well. And we also have an international panel here as well, so as you'll hear when we get into it. Now, at the conclusion of the presentation, we are recording, and I will be sending out a link, an email with a link to the recording. So you can go ahead and view this later if you'd like. It'll be on the Idea to IPO page. It's also going to be on my YouTube channel. And let me give you the address right now. You can subscribe and you can link to it, but I'll give you a link to this panel. But I've got over 100 similar presentations up. Most of them are on startup and startup law topics, and about half of them are probably venture capital panels. So, take a look at it and subscribe to it. All righty, before we get going, by the way, if you're tweeting, use hashtag Idea to IPO, and I hope that you are. And again, I said this earlier, but the chat feature is enabled where all of you can talk to anybody. We're virtual, not live, but if we were live, you'd be exchanging business cards. So feel free to post your LinkedIn address or any other comments in the chat box. All right, so first of all, for the benefit of our panel and for the benefit of me, I'd like to know who's in the audience. So who are you? Are you a startup entrepreneur? Are you an investor yourself? Maybe you're from a larger industry company, a big ag, big food, big equipment, technology enthusiast, service provider like myself, students, professors, media. Okay, we're 67% startup entrepreneurs. And it's about 2/3 startup entrepreneurs. A lot of people interested in technology, about 20%. Wow, 13% service providers. So it's a large group of service providers today. That's more than usual. 9% educators or academia. That's a little bit more. Okay, I'm going to go ahead and close the poll, even though only 2/3 of you participated. That gives us a good sample. So we know that we got 70% startup entrepreneurs and technology enthusiasts, not too many investors. All righty. You know what? I'd also like to know, because I'm nosy, where everybody's from. So as I said, this is virtual and it's worldwide. We're broadcasting all over the universe. So where are you from? So 30% Silicon Valley so far, other North America. Are you in Europe? Asia, Africa, South Pacific, South America. We do these events at all different times of the day and night, so we can make them available to people that are in other time zones. But we're at noon today, so we should be able to get, a pretty good cross section. And it looks like it's mostly like 70% North America, and of that, 20% of Silicon Valley. Got a few people from Europe, a few people from Asia, Africa, and some South America. Okay, awesome. I'm going to go ahead and end the poll. So it's a pretty relatively US-centric audience, but that's all right. Okay, did I cover all of my housekeeping items? I think I did. So before we get rolling here, I would like to introduce our panelists. And we have, in no particular order, Lisa Sulodre. She's an MBA. She's with MIM R3I Ventures and currently in Luxembourg. It's a Singapore, Luxembourg, and Silicon Valley fund, I believe. Harry Villard, director of Rabobank CVC Group, and Harry, I believe, is in the Netherlands today. Andrew Howell, vice president, Food and Agriculture Private Equity of Sarah's Partners. David Friedman, chief executive officer of Panther Capital, another AgTech fund, and John Mann, AgTech associate at Plug and Play Ventures in Fargo. So with that, first of all, welcome panel. Thank you for being here. And before, I've got a long list of things to talk about, but before I jump into that, I guess I'd like to give each of you an opportunity to maybe add a little bit more color to who you are and what you do and what your fund does. I'm just going to go in the order of my screen, which is John, you're up first.
Alrighty, awesome. Excited to be here. So I'm John Mann. I'm an associate with Plug and Play here in Fargo, North Dakota. Most of you know that Plug and Play is based in Silicon Valley, but we launched our AgTech office in Fargo back in about March of 2020, spun out of our food vertical. We had a lot of interest from the corporate partners that we work with. So we launched that in about March. I jumped on in June. And we primarily in our accelerator work with startups ranging from MVP to Series A, introducing them to corporations, VCs, mentors like Roger. And yeah, and as far as investments go, early stage, pre-seed, seed, Series A, all over the chain for AgTech, whether you're looking upstream or downstream, we're hoping to get very involved over the next couple of years.
Okay, before I let you go, John, just a couple words. We were just talking earlier about the Grand Farm in Fargo just got a $10 million grant to build a big smart farm out there. Can you just tell us a little about that?
Yeah, so the Grand Farm is a project that launched in about 2018, 2019. And the goal with there was to create an automated farm for agriculture. The vision has changed a little bit. So they're a farm that's focused on bringing in universities, corporations, and startups to kind of work together on plots and then connect everyone. So they hold events all throughout the summer. They've been at a tent in a gravel parking lot next to about 40 acres for the past 2 years. So they just got this $10 million grant. So it's going to be super exciting to watch them build out a campus and create a center for innovation here in Fargo. So big things are coming up. You guys should take a trip out if you get the chance.
Awesome. I used to live in Fargo. I started my legal career there, and I ended my wrestling career there, in fact. Okay, Lisa Sulodre, tell us about yourself.
Hi, good evening, everyone, and thanks for having me, Roger. My name is Lisa Salud. I'm the general partner of R3I Ventures. We're a deep tech cross-border venture capital fund, sourcing globally, but accelerating into our House of Deep Tech and House of MedTech in Singapore, Luxembourg, and Silicon Valley. I also sit on the investment committee of Mandalay Ventures, an AgTech fund in Australia. I'm the entrepreneur in residence to the Australian and Canadian government, taking our deep techs safely abroad, with AgTech being a huge component of that. So we invest typically as R3I, generally a $500,000 entry check with a follow-on Series A at 2 mil.
Yeah, and did you say that you just raised a new fund, or is this the existing fund in Luxembourg?
Yeah, we've been warehousing. We've got a deal desk that we run for House of Deep Tech in London with Vauban and in the US with allocations. And we've got a desk in Singapore with Sleek. So we're just wrapping up SPV on SPV and cross syndicating with our families. And we've got a 10 million fund we've just launched in the US out of Delaware, and we're launching a new $50 million fund out of Luxembourg. I'm here building that.
Okay, awesome. Harry Villard from Rabobank, from Luxembourg, the
thanks.
Netherlands.
Thanks, Roger. Excited to be here. Well, I was able to set up Rabo Frontier Ventures, which is the strategic investment arm of Rabobank. It's a 200 million fund, and we invest in fintech and agri-tech companies. And our investment thesis actually around or in the AgTech space is about helping the farmer out in running his business smoothly, as well how to optimize the food value chain. So, and we have a special interest in the crossover between fintech and agri-tech, which is an interesting area to explore. It's quite new, but I think maybe we can touch upon it later on during the panel discussion.
Oh, okay. Oh, absolutely. Thank you. Okay, Andrew Howell from Ceres Partners.
Yes, thank you for having me on. So yeah, I work for Steadiest Partners. We are a food and agriculture investment firm based in the Midwest, South Bend, Indiana. I actually sit in Boston. There's two halves of the company. One is we have a large farmland investment fund where we buy farmland all throughout the Midwest and we lease it to a network of farmers that we work closely with. That fund is about 1.1 billion in assets, 170,000 acres. Separately, I help run our venture capital private equity group, which is typically kind of Series A and up, cover a lot of different verticals, been very active in the CEA space, aquaculture, yield improvement, wastewater, a number of different areas. So especially been most active in the CEA space recently with robotics investments and AI and greenhouses, all types of stuff. So excited to be here and happy to answer any questions.
Great. And then finally, David Friedman from Panther Capital.
Yeah, hi, David Friedman, Panther Capital. We are in the AgTech space mostly by way of cannabis. So we have been investing in cannabis for about the last 8 or 9 years. Everything that we do in cannabis translates into non-cannabis. It's exclusively indoor agriculture. We don't do anything externally. And we touch all aspects of the supply chain except the product itself. So everything from farm management software, packaging, supply chain logistics, procurement, et cetera, all the picks and shovels. Our initial 2 funds were early stage, seed and even pre-seed. Our current fund is Series A, pretty similar to what Lisa threw out there. We are, generally about a $500,000 initial check, follow-on capital of $1 million to $2 million. It's currently a $10 million fund that's open-ended and will continue to raise into the space. We admittedly probably are 80% in cannabis, 20% non-cannabis. We continue to look for opportunities that bridge the gap. We find that cannabis has a lot more money to invest and spend given the cost of the cash crop versus tomatoes and strawberries. And so a lot of the innovation comes from that side of the equation, and then ultimately makes its way into the lower cash crops where we can see economies of scale and have a lot of synergies in areas where they don't have as much capital to burn on R&D, because they just can't afford to spend that much money when you're selling your crops for $5 a pound. So
yeah, David, on that, before I leave you, is it the case now that some of the technologies that made sense, like LED lighting, et cetera, and indoor ag and vertical farming for a high value crop like cannabis, has the cost come down enough where you're actually seeing that used for other varietals, tomatoes, leafy greens, et cetera?
somewhat. So LED lights in particular are still a little cost prohibitive in my opinion, given you know, the OpEx costs that go into building an indoor farm that's not cannabis, is remote sensoring and technology, farm management software. There's not much of a differentiation, and those applications are lower cost of implementation, and you know, they give back to the total cost of ownership equation a lot more quickly than, you know, something like lights. I think lights in particular still has a bit of a way to go, but that is, I think, an exception. Most everything else has started to come down in price to a point where it can be used in indoor farming to a large extent.
Lisa, I see you shaking your head, so you must have a view on this.
I don't know, you know, when Thailand got deeply into the cannabis business in a legal way, everyone kind of circled around the infrastructure of cannabis as opposed to the plants, right? Because you can't touch what the army has, but you can touch everything else. And so in Asia, in Southeast Asia in particular, cannabis for a moment became really hot property, the infrastructure around the cannabis business. And I've co-founded an AgTech company in Australia called Rubens Technologies, which has been working on improving yield and basically putting traceability molecularly through algorithms. So there is obviously a lot of interest in this crop in Southeast Asia. There's a lot of hesitance around the crop as well, obviously, given regulatory regimes and military regimes. But I'm always fascinated, and I love what you said about how cannabis can actually provide economies of scale to lower value crops. And I think about Rubens with the traceability piece, where actually, you know, in Australia, we use medicinal cannabis in terms of implementation. But you're right, we can absolutely get economies of scale when we take it out to strawberries and avocados and other things. So yeah, great point, David. And thanks for bringing that up. Good reminder.
Okay. All right. Well, unless anyone else has a comment on that, I'm going to move along. All righty. So kind of the big chatter, I think, in AgTech over the last few months has been the idea that I think investors are maybe reconsidering whether AgTech companies are really appropriate for venture capital. And here in Palo Alto, that's what we do all day, every day. You know, we move fast and break things, and you know, we expect fairly quick exits. You know, hopefully before the end of the term of the venture funds. And what we found is that agriculture has a much longer path than that. It just takes a longer time, it seems. And I think we've seen some disillusionment among investors when they come to realize that. And I guess I'd like to hear from the experts whether you agree with that and whether that's true, and what your experience has been with, you know, how venture relates to AgTech companies. Whoever wants to start that off.
I'm happy to start. I think the thing that I would preach to everyone, including RLPs or any other ones looking at this, is patience. Agriculture is not something that you can apply a typical model to. There's a very well-worn path within healthcare or fintech, or you name the other kind of VC sectors where, you know, there's however many unicorns are coming out day to day. You know, that isn't necessarily the case in agriculture. It is a much slower sales cycle. There are so many people who are trying to ultimately get to the farmer to sell them X, Y, and Z widget or whatever it might be. And farmers are frankly, you know, inundated and overwhelmed with good quality businesses and ones that are, you know, either selling snake oil, and it kind of runs the whole gamut, right? So I think farmers are overwhelmed. They have their core business, which is, you know, infinitely complicated, where you are running massive machinery over 20,000 acres and trying to make as much of a margin as you can, while you have everyone beating down your door saying, hey, use this software, or use this additive or whatever, and it'll give you 20% extra yield, whatever the case may be. And so, you know, the sales cycle, you know, for instance, if you're working on a yield improvement, you know, type technology, whether it's a soil additive or something like that, if you can get a farmer to agree to do it, they might trial it maybe on 5 acres. And the next year they'll do it on 20. And the year after that, maybe they'll apply it. So you're looking at 2 to 3 year sales cycles on certain things. And it's not purely like software where you can just hit send and disseminate it to everyone. So these are going to be kind of slower growth cycles. It doesn't mean that the exits can't be there in the end, but there hasn't been this sort of whole series of massive successful exits yet. And so I think people have to be patient and understand that this is agriculture. And I think what has happened in the last 5 or 10 years is as some of you are sitting in Silicon Valley today, I call it kind of Silicon Valley spillover. It's okay, here's this next, vertical within the US that we can apply this venture model to and, get these hockey sticks returns and keep doing it. I don't think it lends itself necessarily that well. There will of course be outliers in that, but I think it requires patience. I think it requires kind of understanding that this is a very different model. And one of the things I like to tell, potential LPs is I like to think of us as agriculture people doing PE rather than PE people doing agriculture, or VC, or whatever the iteration of that you might consider. So yeah, I think it's just patience is the key that I think everyone needs to stick in their mind.
Yeah, and I like to add on that because the digitalization actually takes longer than expected. And if you compare that with the fintech industry, it's totally different. It's 10 times bigger in funding or deals, etc. But it's really good to understand why. Well, there's a lot of entrepreneurs actually listening to this podcast. It's really good to understand why it takes such a long time. And my opinion is, for the farmer, it's not totally clear what the direct benefits is. And so sometimes it takes quite a while. And if you look at from a user experience perspective, sometimes the tools are a little clunky and not actually integrated well in the daily work. So and that needs to be solved. And what my experience is the biz to farmer proposition is a really hard sell. So the question is how to reach out to the farmer effectively. And what I've seen so far, and I like to, I agree on what Andrew is saying. It's I haven't seen that much successful propositions yet, but the most propositions which are successful are actually leveraging the existing relationships with farmers. So it's more or less a business to farmer model, which seems to be more successful than a direct farmer approach. And the other thing is, I just like the food value chains are very fragmented. So it's not only on farmer level itself, but it's really fragmented. So it's very difficult to scale. So we have seen some opportunities in India, for instance. Well, India is of course a huge country. Some startups are actually quite successful, like Ninja Cart, which is actually sort of a marketplace downstream. And they're very successful in certain cities, and of course, huge cities, but it's not like something you can actually scale and take it out of India and put it somewhere else. So it takes some time to get that up and running in other countries as well. So scalability is also an issue.
So John, you probably have to wait the longest of anybody to exit, because you guys at Plug and Play, I know you get in really super early. But what's been your experience? Have you been seeing some exits? You happy about the sector?
It's been slow for sure. And I just kind of want to, what Harry said around B2B, I think that's the approach that we're looking at with our corporate partners that we work with. Whenever I talk to startups, what I want to see is that they're planning to work with like a large co-op like CHS. Or a large retailer, because that's really how they're going to get to the farmers quicker. I've seen a couple of startups that have had some luck kind of going farm to farm, but they haven't scaled to a large size quite yet. And I think eventually they will have to go down that retailer route. As far as exits, it's been slow, and the expectation is that it's going to take 7 years or more for us to actually get an exit. So it's definitely been challenging, and we go in with the expectation that it is going to take a little bit longer than say like our fintech investments. But we're there for the ride. We might not get as many unicorns as fintech and as quickly, but our hope is that long term it's an area that's going to pay off. And we're a family office at the end of the day as well. So some of our investments, they can be a little bit more personal, and we want to see change happen, and we're willing to throw money at that regardless of whether they become a unicorn or not. It's what we want, but change is a big part of things too.
You know, you
That's
said
actually a
something.
good point.
Go
Oh,
ahead.
that's a good point. I mean, as a traditional VC, right, at the end of the day, it's about ROI. It's about return on investment. We are not, and most sustainability related investors are, sort of not in line with the profitability motive around things like feeding people and stuff like that. I mean, it just, that if you look at traditional farming, this is something we talk about all the time, the subsidies that are paid to farmers are so significant. Without the subsidies, farmers, they die, right? And so from an investment community perspective, how do you deploy capital into an industry that is relied on government subsidies to survive for so long? So it gets very difficult as a venture capital investor to invest into pure play ag solutions, because unlike family offices, and I've worked for a family office before, where they do have, personal projects and change is part of what they want to do because they've sort of earned the right. We as venture investors, we don't have that luxury, as our investors are expecting a return on investment. And so it's frustrating at times when you want to, do the right thing and give back, but you got to look at things pragmatically. And it makes it very, very difficult in the ag tech space in particular, which is, why we tend to stay more on the cannabis side of the line, because that's a whole different ball game in terms of, being able to produce ROI. And I agree, the exits, when you have CapEx costs that are in the tens of millions of dollars, I mean, 7 years is a pretty aggressive exit. We're seeing 12 to 15 years, typical VC fund, we say 7 to 12 years, if you're a pure play ag tech on the sustainability side, you're 12 to 15.
Yeah, I want to come back to that, David. But John, you said something that I have to go back to, because that was really interesting. I hadn't heard this before. Typically, what I've understood ag tech companies to do to go to market is just to go farm to farm to farm. And I think I heard you say something different, that's not really a good strategy. The better strategy would be to team up with a CHS or something like that.
Yeah, so that's primarily how we're looking at it. So I love to see when ag tech founders are starting at the farm level and they're working with, say, a specific farm. There's a startup called Soil Tech Wireless that I'm particularly a large fan of. He raised money from farmers, and he's been quite successful so far. But at a certain point, utilizing the network that like a CHS has and the agronomists that they have, it's going to be a much more efficient way to reach their customers, because farmers still trust their agronomist to a certain extent. So if they're getting a recommendation from them versus a startup having to hire enough of a sales force to go farm to farm to farm, we like the B2B route.
Yeah, trust the agronomist. Agronomist is the farmer's best friend, right? It's like the country doctor.
Exactly.
Okay, so David, coming back to this ROI idea, you kind of teed me up for the next thing I wanted to talk about. The other thing that we've seen generally, I think, it's come down to venture now, is ESG. It's like everybody's concerned about ESG. And even my clients, which are typically portfolio companies, we get due diligence lists from investors, venture capitalists, and we get our little checklist. We want to see your policies and your governance. And so there's a lot of concern about social issues. And by ESG, that's environmental, social, or governance for our audience. Is that driving some of your investment decisions? And I'll let anybody who wants to start this off talk about it. And the reason I say that, I got to set this up. I'm a big fan of agriculture. I'm from North Dakota. I'll never say anything bad about a farmer, but they do have a big environmental footprint, we have to admit. And I think technology can solve that problem. Okay, any comments?
Yeah, I can chime in here, Roger. I spent 10 years of my life developing ESG analytics for the financial markets and integrating it into pension funds and endowments. So when we came to venture, we came with the DNA of ESG integration already built into our strategy. And I think one of the key things that we look for as part of our fund mandate is two things, actually. One is that it had a product, environmental, or social impact as a primary screen. And second, that it has a net zero impact if possible. And so that's the core of our fund, and that's what we invest by. And we're not doing too bad so far, but I would argue that that's largely because we've got a diversified strategy as well. We're not just in AgTech. And I think that's important. The other thing I would say, having been a member of TBLI for the best part of a decade, and the investment community in responsible investment, is that it's not just a tick in the box, right? We deeply care that funds are delivering on this mandate. I would say that in the heart of COVID, as families have been carving out, they haven't been taking on new mandates if you can't physically go and meet somebody and execute. And so they have been re-upping into existing relationships. Hopefully, as our markets free up a little bit more, that might create new opportunities for others. But the good news is that family offices generally don't have a 10-year fund mandate. So what we find is that co-investment serves us really well, where you put $1 in the fund and you put $2 into co-investment, which means that even though we as the fund have to get out by year 8, year 9, year 10, giving the money back, actually the family can stay in. And they want that, right? They want to be able to double down on the multiples. So I think that serves us very well. We get to live true to DNA on ESG integration. And at the same point, our families get to stay in, which is what many of them want.
Andrew, are you thinking along those lines? Is ESG important when you make an investment?
Yeah, I mean, it's very core to what, we do. Our last fund was the, Ceres Sustainable Food and Agriculture Fund. And so we tried to create a process whereby we underwrite, obviously, the financial aspect of the business and whether it would meet our potential return criteria, and also sort of a separate underwriting for the ESG side of it. And so we came up with, there is always a bit of art and science. Lisa probably has, much more of the science piece of this than I would, but you can set a set of criteria, and it doesn't apply to every business, right? We've made large investments into indoor farming where you are growing, in this case, lettuce completely automated, where it's very easy to quantify. There is no chemical pesticides. You're reducing truck miles by 95%, water by 95%. Like that stuff is really easy to quantify. There are other things that aren't as easy, right? We've made aquaculture investments where, we're using the existing ocean infrastructure and anchoring large nets out in the water to grow fish. That's not necessarily saving water, because you're using you can't apply one metric across everything. But I think it's really important to be honest about, the company that you're looking at. And for us, we very much are operating on the thesis that the things that are coming into the market today are inherently much more sustainable than kind of the older business model they're replacing. And I think traditionally speaking, investors would see ESG and give it some sort of concessionary return and say, what, I'm helping the environment, so I maybe will take a little bit less of a return, right? I actually think in agriculture, it is those things that are driving returns much more so, because you're reducing inputs, you're reducing truck miles, take your pick, right? I mean, less inputs means less cost and hopefully more profitability as you're applying, new technology. So it's vital to what we do, and it has to sort of pass both tests before we make an investment.
Harry, is that a thing in Europe as well, or is that just some United States concern?
No, totally not. No, it's of course across the globe and very important topic, and I think even more in Europe. But the interesting thing about the ESG, it has 3 letters, but we only pay attention to the first letter, to the E. So that's that's the interesting thing. But from my perspective, if you look at the governance part, of course, that has always been a part of the due diligence. We relate to the bank, and knowing your customer, where's the money coming from, how the company is structured has always been extremely important. And I totally see the shift towards the E, to the environmental side. Sustainability is now extremely important, and everyone is looking how they can actually comply to the Paris Agreement, and well, so not only from a startup perspective, of course, but also from a large food and ag perspective. So yeah, it's definitely very important measure nowadays.
Cool. All right, well, let me shift gears here a minute. I want to move on to kind of the third big theme I'm hoping we can talk about. Before I do, I want to remind our attendees, if you have questions, go ahead and type them in the Q&A box. We're going to get to them at the top of the hour. Also, I'll just announce that the Silicon Valley AgTech Conference is going to be back this year, November 2nd, Santa Clara Convention Center, in conjunction with the Edge Computing World Conference. It's a full week event, but AgTech will be one full day. And we're going to have company pitches in front of a panel of investors. So stay in touch with me if you want to hear more about that. Okay, moving right along. One of the things I think we've seen these last 2 years, especially with COVID, is the rise of consumerism. I don't know if it's the rise, but maybe it's more of an emphasis on what consumers want. And this is similar to ESG because consumers want to know where their food's from and that it's slave labor free and all that stuff. But it also seems to maybe has enabled technologies and benefited some of the startup companies that use those sorts of technologies. And I'm thinking of sensors. I'm thinking of farm to table. I'm thinking of shortcuts in the supply chain. Can anybody talk about maybe a trend that we're seeing there, how there are opportunities created out of this kind of blockchain is another one that comes to mind. Opportunities created out of the fact that people really want to know what they eat and where it came from. Anybody?
I'll jump in. I
Right.
think it was David who was talking about controlled environment agriculture. And I think that's the first way I've seen kind of the consumer interest in knowing where their food comes from, what's been applied to it. That's where I'm actually seeing products in the store. So there's a company in Minnesota called Revolve, and they do greenhouse production of leafy greens and then tomatoes. So I can go to my grocery store here in Fargo and I can buy, hydroponically grown tomatoes versus regular tomatoes. There's a bit of a price difference, but I think a lot of consumers, including myself, will kind of look at that and go, I'll pay that extra $1 for my little tub of tomatoes. Just to know that it came from a sustainably grown source, and it's being applied, and I know it's relatively low touch, so the odds of it being contaminated are lower. So I think that's the first time I've actually seen it in real life, where these changes in consumer preferences and then the market answering them is actually coming to fruition before our eyes.
And organic, right? I mean, that's the other thing. Okay, sorry.
Yeah, I think there's some back and forth about whether hydroponic can be organic, and there's as it pertains to kind of leafy greens and tomatoes, it kind of a little bit semantics, because no matter what, whether it's organic, I think actually is better than organic, because in a lot of cases you're completely obviously controlling the environment. In some cases, no one's even touching it. But I think, we're getting to a point now where consumers are more scared of what they've eaten. I mean, how many times have we gotten recalls on leafy greens or different things that are field grown? I remember getting a CNN alert on my phone that said to throw out all the lettuce you have in your house a few years ago, a couple days before Thanksgiving. And that is incredibly detrimental to the food chain. Whether grocery stores have turned around and throw out everything in there, and who eats that cost, and it's pretty tough. So the fact that you can now control the environment and deliver, whether it's vertical farm or greenhouse or whatever iteration in between those, you're delivering a superior product with potentially better shelf life, great taste, and the consumer knows where it is. And we're going to get to a point here pretty soon where, using things like blockchain or machine vision, you're going to be able to scan a QR code on that 4-ounce tub of lettuce, something we're working on right now. And that can take the consumer to not just the greenhouse it was grown, but the gutter that it came from and the time it was harvested. And so you could be opening up a package at home and see that this lettuce was harvested 28 hours ago, 40 miles from your house. That's the powerful story when someone's going to feed their family and to give them, a safe product. Funny enough, in the US, the most dangerous food that people eat is actually lettuce. 25% of all foodborne illnesses come from leafy greens, because there are foodborne illnesses from runoff from a local beef operation adjacent to the farm, or spoilage along the supply chain. And so that's why you've seen so much of the vine crops, tomatoes, cucumbers, and peppers, move indoors over the last 10 or 15 years. Leafy greens is starting to do that more. You've obviously seen a massive influx of funding in the vertical farming and greenhouse world to the tune of multiple billions of dollars. Strawberries are the next frontier, and there'll be something that comes after that. So I think we're slowly adopting the the European model, and the Netherlands have sort of cornered the market on this for a long time. And I think the US in the last 5 or 10 years is really starting to wake up to that. So controlling what you can and delivering a better product to the consumer is ultimately going to win out.
And just like to add also simply the fact that blockchain technology becomes more accessible. So that's that's one thing. And the other thing is, of course, regulatory pressure. But the most important thing is, to me, it's not only about consumerism, but finally, it's also about fair pricing. So of course, how to shift from the innovators to the early majority, and the early majority actually choose on price. So it's not like they're convinced that they are going to help the world out, but they just compare the prices in the supermarket, and if the one and so I think what the discussion here, at least in Europe, is how to actually calculate a fair price into the regular products we are used to for ages. And then if you put that into account, you get a more balanced product out there, and that helps out tremendously in making that shift happen.
Any other comments on that?
So maybe I can share just on the vision science front, because we do a lot of work with the Advanced Digital Science Centre of Singapore and into Australia. We've seen a real desire to be able to predict the qualities of fresh fruits, for example, such as how crunchy or how moist or how sweet, etc., and to be able to farm for that. And we saw some huge issues during COVID-19 on supply chain, as you know, and we were involved in a supply chain resilience project between Australia and China on some of our core produce. And I think the question is how much does a consumer really want to know? And I'm going to be the skeptic on the panel here. And how much do they really want to pay for it? And in 2012, we built this analytics product, going back a long time now, where a person could scan in their retail store in Europe the barcode and know the environmental, social, and governance footprint of their product. And the question is, does that really change their consumer perspective as to whether or not they want to buy a product or not? Cast your eyes back down to Asia, and we had a question, which is, do you really want to know if there is COVID in your food supply chain or not? And I can tell you that people didn't really want to know, right? We had so many other problems going on that even if I could tell you, no one wanted to know. And so we've been working on this concept almost like Intel on the inside. So your fruit brand on the inside, you know that it actually came from that farm and it's not counterfeit, but you know because molecularly you can test it. And that's where I think there is a desire that simply, if I'm buying this particular brand of apples, I know that what I get at the other side is truly that brand of apple that was truly grown in that place, but that it's not dependent on a QR code, that it's actually dependent on scanning the fruit itself. And so this concept around sticky labels and QR codes that are going to tell us everything, does it become redundant in that context? And does a consumer feel safer that they've actually scanned the actual item itself and molecularly had the result? I think that has been a new focus for us in this part of the world.
Yeah, well, you have to rely on the oracles with blockchain, don't you? And I've seen companies doing exactly what you're talking about. They can just analyze genetically what you're getting right at point of sale. You kind of reminded me of another big topic. We usually talk about data when we do these panels, And over the last couple of years, what's new about that, I think, is data and cybersecurity. About 4 years ago, I think I gave a talk in Toronto at the Collision Conference on and my theme was that, you know, agriculture is in for a big rude awakening, and cybersecurity, you're going to have to get in line and follow all the rules that the rest of us follow. And it was my perception that farmers didn't really know how to protect their data very well. And a lot of ag tech companies were a little bit cavalier about it because they are gathering massive amounts of data. Well, we've had some big breaches, right? Some big data breaches in the food industry in the last year or two. I'm wondering, is there an opportunity there? Is there an increased awareness? You see any companies, are you interested in cybersecurity as an investment sector, especially in food and agriculture? Anybody? John, I got to ask you, I mean, you're seeing a lot of companies at very early stages of people kind of, what's new in data, I guess is another way I could ask it.
I mean, as far as cybersecurity, it doesn't come up. Startups don't mention it. They're not going to talk about it. The most I'll hear is they might have a little blurb in their deck or about how farmers' data is anonymized, and you won't know exactly who it is. You know, they can see each other's data, but they don't know exactly who it is. That's about all I get. So there's not a huge focus on it, but I think there's an overall shift in not just ag tech, but the market as a whole towards subscription services. And I don't know how much farmers like as products go more towards subscription and their data is out in the middle of nowhere. You know, they don't know where it is. And then you have edge computing coming to play too. So I think there's going to be a little bit of a shift between farmers, between those who are using cloud services and don't really care as much about their data, and those who want that edge computing and they want devices on their farm. I think it's possible that we see farmers who are very technologically inclined. They really care about the IoT side of their farm, and they're going to push to have it that they own their data and it's all on site. So it'll be interesting to see it develop, but most startups aren't talking about data security at this point.
Yeah, and I would echo that, and probably magnify it to a large degree. Add cannabis into that equation, and they're even more protective of their data and more suspicious of what's being done with their data because it's not federally legal yet in the United States. And I joke a lot. I mean, I say this about cannabis, but I think it's very true of agriculture in general. I tell people if they really want to get into the space, they need to dust off their fax machine because we're just notoriously very behind the curve in terms of technology and innovation. And it's still, I think, dominated by a lot of small farm, family-owned businesses. I mean, the large, multinational groups notwithstanding, and these are people that are, I dare say, more entrepreneurial lifestyle businesses, right? And so optimization and scale is not part of the vocabulary. And therein again lies sort of that difficulty in trying to back the right horses in this space, because of the complexity of how all of that works together. And, I think, like Lisa said, the question is, do people really want to know what they're doing wrong? Just like, do they really want to know what's in their food? And I think we still find that in a lot of cases, that answer to that is no. They don't want to know what they're doing wrong. They want to just keep forging ahead and, trial by fire.
Interesting.
Yeah, and the interesting thing about data and data security, but here in the Netherlands, we support an initiative. It's called Joint Data, which is a data infrastructure hub. And the interesting thing is, it's all about data. So all this data fuels interesting applications. But the question is, who actually owns the data? And if you produce data on farm level, who's actually owning that? And so with joint data, we put actually the power back to the farmer. Say, well, you are in control. You can give actually consent to third parties who wants to access your data. And I think, I'm a big supporter of that initiative because it also protects the farmer from just taking advantage of all the data produced on the farm itself.
Maybe
Good.
I can chime in here because we have cybersecurity as a core component, and we've just landed in Europe a critical infrastructure cybersecurity protection company called SIGA, which really is working on the manufacturing side, the processing side around electrical signal level 0 monitoring. At the end of the day, food is critical infrastructure, right? The growth of food is critical infrastructure. Without it, we're not surviving. So we actually see a move, especially with ties into fintech. I love what you said, Harry, that there's this tie between AgTech and fintech and even insurtech. I believe my company that I've invested in AgTech is actually an insurtech exit. It's not an AgTech exit. That's where I'm going to monetize. And so just in that spirit, there is that digitization aspect. And on the back of that, if you are providing your models into the insurance industry or into the financial services industry, you're not selling it unless you're cybersecurity compliant. So that's one key point. The second key point I would add is that there is a lot of counterfeit in the food production market. Avocados in Mexico, in the nut business. I mean, there's counterfeit products all over the world, and people who are in that business don't want others to know that those products are counterfeit. And so we actually work on the bleeding edge of dual use case technologies and anti-counterfeit technologies. And organized crime have a vested interest in that. So we are seeing a product called Detexion, mid-market cybersecurity company being adopted. It's a fintech mid-market compliance product. But for those AgTech who are gathering crop intelligence, who are using it for fintech or insurtech, see that as a natural fit for being compliant when they go to sell on the other side. So yeah, food for thought. But I don't see, especially with Singapore putting in their cybersecurity regulations, average time to detection more than 300 days. I mean, they're already living with us, right? The question is when are they going to do something nefarious?
Any other comments on that? Okay, I do want to ask in the little bit of time we've got about a couple of different technologies. The other thing, and maybe it's just me, or I'm going to ask you, it seems to me we all saw the Bear Flag acquisition by Deere, and it seemed to me that over the past couple of years, I've seen autonomous vehicle technology come into the farm and into the field. And I know this because, the federal government does not regulate autonomous tractors the way it regulates cars because they're out in the fields. Who cares? In fact, I only know of one state that actually would dare to regulate it, and that, of course, is my state of California. But what do you think? Autonomous vehicles and just more generally robotics. Have we seen big advances over the past couple of years? Anybody want to jump on that? John, I'm sorry, go ahead, Andrew.
I was going to say, absolutely. I think we're still in the, early innings, but there's been a lot of advances. I mentioned the CEA market in vertical farming. And then, we backed a greenhouse that is completely automated from seeding, growing, harvesting, packaging. No human hand ever touches the product. And that's happening today. It's not in a lab. It's not 5 years from now. We're producing 2 million pounds of product this year that no one will ever touch. We have investments in robotic harvesting. So we've got a company called Tortuga that is robotically harvesting strawberries today at the same accuracy that humans are doing, which is really powerful. And so there is a worldwide labor shortage, and that applies to lots of different types of crops. And so automation is going to be key. One thing that, whether it's a CEA market or whatever else, I think it's especially true in the CEA market, is that this is, at the end of the day, is agriculture. It's about cost and yield. So how can you keep your costs as low as possible and your yield as best as you can? And people are complicated and expensive. And if you can replace them with a robot, and that creates other jobs in terms of creating those robots. But I think on farm, whether it be indoor or outdoor, robotics are going to be huge. I mean, they're here today, but they still have a long way to go. We're seeing more applications in the outdoor world. And so I think it's going to be continuing to be that's probably more of a pure kind of venture investment, because you're going to have 10 and 2 are going to make it and 7 or 8 might go under, but you might get those more venture style returns in kind of the automation robotics world. But I think we're going to see a huge continued boom in that in the next 5+ years.
Okay, anybody else want to add to that? All right, well then in the last minute that we've got here, my last question to each of you is how do people get a hold of you if they want to find out more about you or your fund or about what you're doing? We'll start with you, John.
Yeah, email, LinkedIn. I can put my email in the chat. Otherwise, yeah, happy to have a call with anyone who's interested in learning more about Plug and Play or wants a little bit of publicity for their startup. But no, happy to take emails or LinkedIn messages.
Okay, good. Lisa?
Yeah, you can find me. I'm in the chat. You can also find me at 500, and I'm an alumnus of Plug and Play. I highly recommend Plug and Play if you want to go test your product among big corporates.
Oh, interesting. Okay, Harry.
Yeah, I didn't mention in the beginning, but we have global mandate. So if you're interested to reach out, please do on LinkedIn or via mail.
Okay, thank you. Andrew?
Yeah, same for me. I put my email and LinkedIn in the chat earlier, so feel free to reach out.
Okay, and then David.
Yeah, I just dropped my my LinkedIn name, full name, and email in the chat group as well.
Okay, great. Well, thank you very much, panel. We're going to go to the Q&A session now. I just want to remind our attendees, if you've got questions, go ahead and type them in the Q&A box. My name is Roger Royce. I'm your moderator. I'm a partner with Haynes Boone. It's a law firm. I'm based in Palo Alto, California. And again, just to remind you, we are sponsoring a big AgTech conference here, the Silicon Valley AgTech conference through Edge Computing on November 2nd. So put that on your calendar. Okay, I'm going to just go through a couple of these questions. Let's see here. This one's for you, David. Here is some, do you do hemp? You said you invest in cannabis. Does that include hemp?
Yes, very little, but yes, it's on the same side of the spectrum.
Okay. Well, before I leave that, I should have asked you about that myself. I mean, you don't have the same problems with cannabis, right? Because there are pathways to legality federally. Isn't that a very promising area, wouldn't you say?
Yeah, it is. It's just that, as a fund, we have a specific thesis and we only have so much in the way of resources and capacity. And it's kind of like I grew up in the jewelry business and my family imported colored stones like rubies and sapphires and emeralds. People would always say, "Oh, can you get me a diamond?" It's a totally different business. Even though it seems like it's part of the same industry, hemp is really a totally different business than cannabis. There are some regulatory overlaps, and I would say that it's got some material usage that people are looking to utilize it in manufacturing and that kind of stuff. And then there's the CBD stuff that's more nutritional, and it's very, very competitive. But it is a very different vertical in terms of our investment thesis. Part of what our investment thesis is that because cannabis is federally illegal, we feel we have, with venture funds, it's always hard. I came out of early stage tech and I got out of it because family offices at a certain point were just poaching my analysts and paying them more money than I could pay them. Why would they pay me 2 and 20, right? I mean, it just didn't make any sense. And so with cannabis, we feel we have a defensible position. There's a reason for us to pay us the 2 and 20 because you can't navigate it on your own. You can't figure it out on your own. There's way too much domain expertise. And we got a good 10 years and I'll be retired by then, so I don't need to find another industry. But hemp is because it's illegal, it just doesn't fit that thesis for us.
How about the rest of you? Anybody else have an opinion on hemp? Okay.
I'd say we're somewhat excited about it in the Midwest. It's another crop that farmers can plant. There's been some experimentation here in North Dakota, and I recently read about PFAS remediation. So forever chemicals could potentially be removed from the soil, from the environment by hemp. So I think there's a lot of possibilities for use in the materials sector, and it's a crop that farmers can rotate in and take heavy metals out of the soil. So there's some excitement, but definitely challenges around implementation.
Okay, thanks. A question about blockchain technology on an organic plantation. So somebody's asking if you're familiar with agunity.com or agriledger.io. I am not. Are you? Let me ask more generally. What's going on with blockchain? Because I remember seeing so many companies, blockchain in agriculture was going to be the next big thing for provenance. And has that happened? Is distributed ledger being widely used, and has it solved the problems of, for example, in organic, he said, does it solve the problem of more organic products being sold than produced? Anybody know?
Well, it always takes longer than expected,
Yeah,
but I
Always
think
costs
it's
more.
sorry.
It always costs more and takes longer than expected.
Well, I think it just takes some time, to get the use cases up and running. But I think the promise is still there. So look at, for instance, the trade commodity finance area. A huge potential there, and we are getting there. And it's the same thing on traceability. But it takes longer than expected. But I think. It was a huge promise there, but they were still developing the technology itself. So I just give you a very simple example. So no one has to explain internet technology or mobile technology. You're not going into detail how HTML and SSL is actually working out. But as long as you have to explain the blockchain technology, it's not on the maturity status yet as all the other technologies at the moment. But we will get there.
Roger, I just want to say in Southeast Asia, blockchain was really hyped and sold to farmers as the next big way to earn more money on farm. And all this tokenization has delivered very, very little to the farmer. We've got fish coins, we've got mango coins, we've got all kinds of coins. Who's truly monetizing that stuff? Half of these guys don't even have a bank account. So I think it's the concept of financial inclusion and digitalization for smallhold farmers was a big promise. And I think it's just taken a long time to live up to its promises. And there's just been far too much fraud and far too much instability in the regulatory ecosystem where we are.
interesting. Well, maybe someday. Okay, here is a question. We didn't get into any SynBio stuff, and this is sort of like that. It's about artificial bacteria-based protein supply. I didn't even know there was such a thing, like artificial milk. But let me ask, first of all, is anybody doing a bacteria-based protein? And more broadly, are any of you investing in or interested or excited about synthetic biology generally? What is sometimes called fake meat, or maybe plant-based meats, things like that. Anybody?
We just set up a massive hub in Australia in Sydney. If anyone's interested, there's a huge synthetic biolab that's just been launched, and the government Investment New South Wales are right behind it. So if you've got a startup in that space and you want to land in Australia and test bed your product, come down and see us.
Anybody else? Plant-based foods? Anything like that? No? All right.
Plug
I
and
would
play
say there's certainly interest, but it's incredibly competitive. There was, I think, a year and a half or 2 years ago, we compiled a list with some other investors, and there were 125 alternative meat companies, like all doing similar things. Probably a lot will be successful, but I don't know how to pick a winner when there's 125 doing it.
Someone else had a comment, I think. David, were you going to say something? Or John?
No, sir.
Yeah, plug and play is very interested. That's not my area. That's our food vertical, but we look very closely, and a lot of the corporations are very interested. So yeah, expect really large growth. I think there's a bit of a consumer and cultural hurdle to get over. And I mean, the difference between plant-based meats versus the kind of lab grown is quite a bit of a difference. And I think I'd personally be more excited about lab grown meat rather than plant-based alternatives, as the nutritional profile of those is relatively questionable, and the sustainability is as well. But
I'm sorry, of which one is questionable?
of plant-based, the nutritional profile of a lot of plant-based products tends to be high in sodium and not entirely healthy. Be better off eating a diet with real vegetables.
Really? I didn't know that. Is that because there's so much oil, or?
Usually it's a lot of sodium that's in the
Sodium.
products, especially if they're trying to mimic a product like beef patties.
Yeah.
It could be a little bit better, but I mean, it's still a heavily processed product. If you really want to be healthy, you're better off just eating raw vegetables from the grocery store.
Yeah, I actually heard that on a webinar from a doctor, a heart doctor this week. He said the exact same thing. He says his patients did not get one bit better by switching to some of the alternatives than if they just stuck with beef, so it didn't help. But that's a whole different webinar. Well, here's a question. Somebody asks about two things, one is world hunger. We used to, when we did these panels in the early days, 10 years ago, we'd start talking about food security. And we hardly even mention that anymore these days, which leads me to believe that people are very optimistic about the technology, or maybe there is no food security problem anymore. But do any of you have an opinion on this, or are you working with a company that actually is their goal is to address food security or food insecurity, I should say? I got to believe you are, Lisa, because you're all over the world with your thoughts.
Reuben was born just for that purpose, right? We want a 30% reduction in food waste. But Singapore, we've got a commitment by 2030 that we'll grow 30% of our product, of our food. And I don't know if you've ever been to Singapore, but that's the equivalent of a farm in Australia with 4 people on it is 5 million people living in Singapore, right? So just the land and economies of scale, we really are a little red dot. So yeah, I think if you want to also get on the leading edge of indoor aquaponics, etc., Singapore is really looking for great new innovations that can help us grow our own food.
Yeah, I guess we don't think about it that much here in the United States. In other parts of the world, they do. About 5 years ago, we took our show on the road to China and did a series of AgTech events. And I visited several, in fact, we did it 2 years in a row. And I did visit some of the farms there. And China AgTech is a matter of survival. I mean, really, they have to feed their population. It's not that yuppies want to have fresher tomatoes when they're sitting in their restaurant in New York. I mean, it's a much different sort of mindset. It's kind of what I thought. And they were very hungry for technology. And then the second,
I just like to comment that. Well, I won't say that technology can solve everything, but at least it's helpful. But we support one company in India. It's called AgroStar, which is actually an e-commerce or input provider. But next to the input provider, they also give agronomy advice through an app. It's a sort of Instagram app where they can just make pictures of the commodity, get advice what to do. And they did some experiments, and if they just follow the advice given by the app, they got an improvement of 40% yield improvement, better margins, because making the right market linkages is also extremely important, and still have less cost. Although they actually bought more expensive inputs. But doing it on the right time, that also saves a lot of money. And just to give you a size of the market, so there are 120 million smallholder farmers. So there are a lot of them in India only itself. So I think you can do major improvements just providing the right technologies on the right place.
right. So I just want to remind our audience and attendees, if you've got a question for the panel, please put it in the Q&A box as opposed to the chat box. We're going to go off the Q&A for the questions so I can find them all. So let's see, the second part of that question had to do with rising food prices. And I think the broader issue maybe is maybe around supply chain and shortages. I don't know if I think most of you are involved in the production side of agriculture, maybe not so much on the food side or the distribution, but have you been investing in the sector? Are there opportunities in supply chain? What do we think the future is going to look like for supply chain? Anybody have a view on this?
I think last mile fulfillment as a service is absolutely a huge market. We were landing into Asia just before COVID kicked in, a company called robotics, They do vertical last mile fulfillment as a service, reducing warehouses by 90% of floor space and reducing people by 60%. It's just phenomenal, their achievements. And these guys, their pipeline has absolutely exploded. I think there are like multi-billion-dollars pipeline of weighted sales and are now the key partner of Microsoft and the future of Microsoft's supply chain. So I see last mile fulfillment as a service really coming into its own, and also the implementation of step change in supply chain logistics ecosystems, really being able to monitor from, especially in cold supply chains, from point of farm all the way through to the other end, integrating across these platforms. That's a really big focus for many parts of Southeast Asia, and certainly for Australia, especially with our aquaculture industry.
And what's your experience, Lisa? Then, if you look at the scalability, is it really scalable across countries, across commodities, and what's your experience?
Yeah, Abounds are just doing amazing things. I find that company so incredible. These guys are delivering everything from tires to medicines to fresh fruit and vegetables, you name it, they've got it going through. And the biggest retailers in the world have partnered with them. So in Canada, right in the heart of COVID, they raised 100 million from the Canadian government and Ontario Teachers Pension Fund. They have literally rolled it out with the largest retailer in Canada. They've rolled out all across the US. And I've been trying to get them to come into Europe, but they just have so much business coming out of the US and now into Asia via Korea. They haven't needed to come into Europe yet. But I would keep an eye on that company because what they're doing is pretty phenomenal.
You know, Lisa, let me ask, because a lot of your experience has been in non-US markets. Is there an opportunity for US-based tech companies to sell their tech into those places? Because a lot of the things you're describing, I can think of companies that would be a great market for them. Is that going on, or is that possible? Is that something that investors can assist with?
Yeah, I think for investors, the greatest way to get higher returns is to leverage that natural geographic arbitrage. Our entire fund thesis is built on that. Source globally, land into Singapore, scale into Europe, pump it full of non-dilutive money and exit it into the US, or reverse, take it out of the US through Europe and back into Asia. I just think the natural geographic arbitrages that we have available to us are really significant. And let's be honest, just like in healthcare, if it doesn't have an FDA approval on it, 80% of medtech in Asia is imported. And we look to the US as best in class, right? So I think you can always get a higher premium on an American-based product in Asia than you can on an Asian product in Asia. That's unfortunate, but it's true. So I believe that if you're an American company, the opportunity to exploit that geographic arbitrage for higher margin, you know, in the developed markets, and take Australia as a great example of that, is very much available. Our Singapore calling program and Luxembourg calling program is built for exactly that. We have huge demand from American startups coming out.
John, I got to believe that's true where you are out in the Great Plains, you know, and just for our audience, you probably already know this, but, you know, agriculture in the Midwest is a lot different than agriculture here in California in terms of the crops. And I know of companies in your area, John, where their biggest markets are outside the US or in places like Russia, where they have humongous, you know, wheat fields, you know, that have to be farmed. So, I mean, are you seeing that as well, John? Do your technology companies translate well in other places?
Yeah, they definitely translate elsewhere, but it can be somewhat limited and it really depends on the cost. So if they're going to Ukraine where they're dealing with large fields, sure, it translates fairly well. But if you start going to areas with smaller farms, like we were talking about India, you know, a lot of times the cost is not going to translate well enough, especially if it's IoT, infield sensing, things like that. It's way too high of a price for most of those farmers to afford. But definitely technology coming from North Dakota, the Midwest, headed to Europe, Brazil, especially, really common to see. And with supply chain, we've had those challenges as well. we've had a semi-autonomous truck out at the Grand Farm this past summer. Their goal is to have those help with sugar beet harvest, where they've got trucks that can follow a lead truck, because it's been a challenge with labor shortages, and something like sugar beets, you have to get them off the field relatively quickly. So, the hope is that the technology is here, it's developed here, and then it goes elsewhere.
Yeah, I remember those beet harvests and all those beets all over the road. Okay, here's a question. How do those of us that mentor founders in technical areas get more connections with college and university students and instructors? So let me tell you, with our program, the Silicon Valley AgTech program that we started here, we saw tremendous interest among colleges and universities. Davis has a big program, a lot of big programs in the Midwest. NDSU, of course, very big program. Santa Cruz has an ag tech program, believe it or not. They're just all over. Berkeley has a pretty good food and ag club. Stanford, right down the street from me, has a food and ag group. So I thought there was a lot of interest in this sector among universities. I'm just wondering, do any of you work with universities and what you're doing, maybe in some of the accelerators, some of the programs, et cetera?
We've got a commitment to help create 1 million internships over the next 10 years, and we're working with virtualinternships.com. Highly recommend them. They're one of our 500 startups. But these guys literally are working with more than 75 countries on paid internship programs where the university pays for the student, and we're pumping them into our startups as qualified labor. It's across 18 different disciplines, everything from cybersecurity to marketing to data science. And also on our company side, we're cycling them through our companies, giving them access to market. So yeah, if you want to contribute to a good cause, that connection into university is right there for you in the chat.
Anybody else?
Yeah, so we work relatively closely with NDSU, and I think that as far as getting involved with them, it's finding the right contact and meeting them in person on the ground. Usually there's clubs or professors who are very research focused. So if you can get connected with them, they're a fantastic resource, and it helps you get high quality students who are coming out who are interested. But I think that first step is really to get involved specifically with those universities and potentially the city they're in as well. So Fargo offers, they'll cover part of the internship, the wages for students who are from the university. So they've got really good connections as well. So I think it's really just getting boots on the ground and actually talking to folks there.
Yeah, and some of them are a little better about outreach than others, I've noticed. NDSU, they've been sending their students around out into the fields long before I even heard the word AgTech. And especially here in California, where it's such a big industry, you'll see them reaching out as well, or being very receptive, I think, to if people want to come into the university and provide some instruction. So we had a question about edible insects in the chat that I said I wasn't going to take chat questions for Q&A, but I do want to talk about this because John, has probably more food than ag for you, but how about the rest of you? Have you seen that become a big thing? And by the way, I've seen edible insects as livestock feed, and I've seen edible insects for humans, insect chips, etc. How's that doing? Anyone?
I've looked at a couple of those businesses, and Roger, like you said, I think the easiest application for that is in the feed world. I think the easiest way that I've seen people do it is go into the pet food world first, and then maybe into the kind of broader cow or whatever else. Those applications I think are really interesting. I think it's an uphill battle on the human side of it. There are huge populations around the world that eat them on a daily basis. I think it's really tough in the US. Anecdotally, we were looking at a company, and it was, I had gone to meet with them, and I brought back cricket bars that actually tasted pretty good. So I went around my office and I said, hey, I'm looking at this new, I didn't say I forget what I called it. I didn't say it was insects. It was like, this new kind of bar company, eat it, tell me what you think. And they were like, oh, it tastes pretty good. What is it? And I said, oh, it's actually cricket. And then they were retroactively disgusted because even though it didn't taste bad, their brain told them that they shouldn't like it. And I think that's really hard to break in the US. So I'm not saying it's impossible, but I think it's an uphill battle.
Yeah.
And plus the human market is tiny in comparison to the feed market. So if you can create a, cost-effective feed alternative, that's all the business you need.
Yeah. Okay, here's a question about container-based vertical farming. Is that better than vertical farms for leafy greens? I'm not sure what the difference is unless you're, by the way, I heard that China's building like a 50-story vertical farm in Shanghai.
Yeah.
So
Happy to take this. I've reviewed
Sure.
probably 50 to 60 different CEA, and we've written white papers on kind of comparative economics between vertical farms and greenhouses. And I think the answer to the question is it depends on your use case. If you are an individual who wants to operate a farm, a container farm is great. At a commercial scale, I don't think they make sense because you are limited by the form factor that you are in. It's hard to take it from 10,000 pounds of production to 50,000 pounds of production, right? So it's, you're not going to get the ability to automate as much if you're in, say, a 53-foot trailer. You're not going to get the sharing space for harvesting or processing. You're going to replicate a lot of things, and the square footage really matters. And so, we're big believers in the greenhouse form factor for growing that crop specifically. So if you're an individual and want to have a side business and you love growing plants, containers, great. I think if you want to run a large commercial operation, I don't think it makes sense today.
any other comments on that?
Actually, Andrew, I'd be curious to hear your thoughts on greenhouses versus vertical, and when you'd be looking at one versus the other.
That might be another hour-and-a-half webinar if you really want me to get into it. But the short version of my own opinion, not speaking for anyone else here, is I think with vertical farming, you are in some cases solving a problem that doesn't need to be solved, in which we are not land scarce necessarily in the US. If you are trying to work into the supply chain of a retailer, for instance, which is where you want to sell a couple million packages of 4-ounce cut baby leaf lettuce, right? You want to be near their distribution centers. They don't care whether you're in a city or not. In fact, if you are in a city, you might have to truck it out to their distribution center in order to kind of, be in their, typical model. They don't want you delivering individually to stores. So we think, you can build outside of a city. And, we pick South Bend, Indiana, for instance, and we, within 300 miles, touch 55 million people and major distribution centers for every single retailer. So the point of that is to become as seamless into their distribution channel as possible. And so a vertical farm, I think, has a lot of interesting promise. And, David was talking earlier about cost of LEDs. Moore's law is taking over a little bit there. They are becoming, more cost effective. But you are still, in my opinion, you are removing the free sun and augmenting that with exclusively LEDs. Now, David said earlier, cannabis is a different, animal. You're talking about $1,500, $2,000 a pound versus $6 a pound if you're doing your job well on lettuce. And so, you are adding complexities in terms of the verticality, right? Whether you're harvesting on a scissor lift or whether how you move airflow throughout them. This is a very long conversation there. It's a really interesting application on both, but at the end of the day, you got to look at the end product. It's not that valuable. And so how do you create as much of it as possible, as cost effective as possible? So the adage we use around here is Henry Ford didn't build the assembly line on 5 floors. He built it on 1. And so happy to be proven wrong over time, but that's just sort of been our thesis internally here is Harry can, on his way home tonight, probably see 10 greenhouses, and they sort of invented the market and have done a very good job. And so replicating that, I think, is more cost effective and sort of CapEx than sort of creating it from scratch. But there is a lot of really interesting novel technologies, and we'll see how it all shakes out in the next 5 or 10 years.
I think you've got your next big topic, Roger.
There you go. Okay, we have a question about investing in African agriculture. For someone getting into the market, especially a country like South Sudan. I did some research on this 5 or 6 years ago. And in the developing world, during the Clinton years, the World Bank had a policy of basically just giving direct aid to a lot of these countries. So they never developed their own infrastructure. And that came to an abrupt end. And there's been like a resurgence, or I should say, probably a surge of developing AgTech in places where it's kind of inhospitable as well. And that's created some demand for AgTech companies. And I would say Africa is probably like that. I've been seeing a lot of African companies coming into the US with really cool stuff. And I think there's opportunities there. We've heard about blockchain, we've heard about precision ag and irrigation. Anybody want to talk about that? Lisa, you're all over the world. You must be in Africa.
Yeah, a couple of years ago, I teach digital transformation, masters versus robots at Singapore Management University. And we spent a lot of time to talk with Olam, who were moving to 100% digital transformation in Africa. That was their big mission. I think that's fraught with responsible investment challenges, to be honest, notwithstanding the volatility of some of those countries. But, you know, at the end of the day, I am a little bit skeptical, Roger. And I'm a little bit skeptical because part of the reason why you do have stability in some of these nations is because people get their wages and their income from this industry. And so, you know, I find it difficult to understand how you're going to get 100% digitalization in some of these farming locations where entire communities are dependent on that as their livelihood and income. The second thing I would say is we did do some work 2012, 2014, step change in agricultural logistics ecosystems in my Triumph Executive MBA program. And that's really interesting because one of the biggest challenges is, of course, around getting cohesiveness of the physical transportation supply chain in many parts of Africa and seeing if we could connect that more feasibly. And also taking the information asymmetries out of that value chain, especially around food availability or food quality. I don't know that any of those particular projects ever really got off the ground. Maybe we were too early at that point in time, but I do know that a significant amount of funding has come from 5 Western European universities to try and take that to the next level. And there is a scale program specifically that was built for exactly that. I don't know anything else more about Africa, Roger. Unfortunately, it's not in my mandate, but they're the initiatives that I have seen kicked off in our part of the world. And that connection of Asia into Africa is a pretty strong one.
Yeah, it sure is. Okay, with that, we are out of time. I know we've got a few questions we didn't get to. Sorry about that, but you have the contact information for the panelists if you'd like to reach out. I want to thank our panel for being here. This was a really good discussion. I always learn a lot at these, and it's a lot of fun. Thank you, attendees, for attending and for all of your great questions. This is Roger Royce, your moderator with Haynes & Boone in Palo Alto for Idea to IPO, and we are signing off. We will see you next time.